Jason Jessup, CEO, founder of Magna Mining. Welcome back to the Arlington Rapallo. How's it feel to be back on the Italian Riviera?
It feels a little bit like home. It's fantastic.
Good.
Yeah, it was great.
Good. I'm sorry you couldn't bring your wife this year. I guess the kids and family, other stuff calls her back home.
Yeah, she has been pretty busy and she's back at work, and I send her lots of pictures so she knows what she's missing, and
Good.
hopefully we get her back again.
Good. We'll get some more of those as well later on. Now, what's remarkable about Magna, given that the nickel price has been going mostly south for the last year or the last few years, your share price keeps going up. Why has Magna been the standout performer in the nickel world? And I understand you've got different metals as well. What's been behind the success of the share price on the company in the last 2 years?
I think there's a lot of factors to it, but we made an acquisition earlier this year that we announced last year, and obviously that's been a huge driver and a major catalyst in our growth. So we acquired a producing copper mine in Sudbury, as well as 2 other past producing mines on care and maintenance and 5 exploration properties. And that acquisition has, really been a turning point for our company and a major driver of the growth. And again, we have many metals in our properties in the ground, and we're focused on copper right now. And obviously there's a strong sentiment towards copper, and I think that's helped as well.
Right. Okay. So it's being able to switch gears between copper, nickel, and PGMs.
Exactly.
Okay. If you look forward over the next year, do you see the focus staying on copper, or are we going to start to, given that you're in the Sudbury Basin, which is as famous for nickel as it is anything else, are we going to focus more on nickel, or is the focus currently on the copper?
Yeah, our focus is going to be squarely on our Levack mine, and specifically the footwall of the Levack mine. So even though we have a producing copper mine at McCreedy West right now, we believe that there's so much potential left at Levack. So we've been drilling there, been getting some great results, high-grade copper and PGMs. So our focus will be on Levack, and will be on copper and PGMs in 2026, and I think driving forward beyond that.
What's more important, I'm thinking about the fact that the platinum price is up about 60% year to date. What is the metal mix in terms of revenue, copper, PGM, and in the future maybe nickel?
Yeah, well, right now currently it's about 70% copper,
okay,
about 20% precious metals, which is really platinum, palladium, gold.
So,
and then the other remaining 10% is split between nickel, cobalt, and a little bit of silver.
okay.
But going forward, I would say it's probably going to get less nickel, especially in the footwall areas, and higher in PGMs, where we could see something closer to 55 or 60% revenue from copper, and then maybe 30 to possibly more percent in precious metals. So that will be our focus, and that's kind of where I see the split. And again, some of the precious metals we have in the footwall are pretty spectacular, where you're talking, multi ounces of precious metals. So we'll see where that goes.
What do you see in terms of the tons of annual copper and ounces of annual platinum group metal production? What does that look like 25, 26, 27, etc.?
Yeah, and we're working through some of those details right now to kind of give a better design, a better plan to know what we can produce. So broadly, I think that, we're looking at next year of being somewhere in the range, and this is again a fairly broad range, of about 20 to 25 million pounds of copper equivalent.
Per year?
That in 2026 from our McCreedy West mine. And again, these are forward-looking statements, and it could change. We're working on that plan to finalize it, but something in that range is where we hope.
That's just McCreedy West?
That's just McCreedy West.
Okay.
Then looking at Levack mine, because of the high grade, you don't need to produce a lot of tons to produce a lot of pounds. So we don't know exactly what that's going to look like. We're putting that plan together. We're doing a lot of drilling. Potentially we could bring a new zone online, a new high-grade footwall zone. But again, drilling will tell us if that's possible. But that has potential to double and triple that very quickly.
Nice.
So again, lots of growth potential, working through some of the details. We've only owned these properties for 7 months. So
how much did you, it's slightly embarrassing to even ask the question or to answer it, but what did you pay for these projects?
Yeah, it's a little, so we paid $5 million cash on closing plus $2 million in shares, and we have another $2 million cash payment due at the end of 2026.
Unbelievable.
So $9 million in total, plus we took on about $10 million in closure liabilities.
Right.
So it was a great deal, and I think really what it was is one of those classic synergies of non-core assets in the hands of a bigger company.
Right.
Now in the hands of a junior company that understand these assets, understand what they need to be successful, and then applying that, and it seems like we're getting the valuation because of it.
Wow. Impressive. I mean, I'm sure the return on capital is just many hundreds of percents, and it's going to keep going as you invest in those projects. What do you see in terms of the exploration possibility? If I think about things that excite shareholders, exploration is pretty important. What do you see in terms of the exploration possibilities for the next year?
That's a great question. So we announced an intersection, an area we're calling the R2 zone, which is at the Levack mine in the Footwall, about 500 meters to the east of the Levack Footwall deposit. The Levack Footwall deposit was a big discovery that FNX made back in 2005, and really what drove that stock to become one of the best performing stocks in the 2000s on the TSX. And, again, we only have 2 holes into it, but what we're seeing is very similar to what we saw at the Levack Footwall. We renamed it the Morrison deposit. So if we can delineate, and these are just numbers based on, expectations or what we're hoping to do, but if we can delineate 1 million tons there, that will be a game changer for our company.
This is in R2, a potential
in
million
the
tons.
R2. If we can delineate just 1 million tons, and our holes we've drilled now, we've drilled the upper hole. We call it our 14A hole. We intersected some really high grade nickel with some good precious metals. 140 meters below, we intersected multiple high grade veins, with the best vein being 1 meter at 29% copper and 53 grams of precious metals. But there was multiple.
Say that again slowly, please, Jason.
29% copper,
Yeah.
53 grams of precious metals. And within that 53 grams, there was 29 grams of gold. So if you just did the in situ value, and this is very similar to mining widths or vein widths that we mined at the Morrison. And at the Morrison deposit, when I was with FNX and we were mining that deposit, we would have a 1 meter vein similar to this. And we would mine it maybe 2 meters wide. So you just take those numbers, dilute them in half. Still pretty good stuff. We made a lot of money.
Yeah.
And there's multiple veins we intersected in this hole. So it looks like we could be possibly in a stacked vein system in the breccia similarly. So again, if we can, and those holes were 140 meters vertically apart. So we're doing another step down, another 50 meters and then 150 meters. Those holes will really be telling of what their potential is. But if we're successful in those 2 holes, I think we'll call it a discovery.
Right.
And
when are those results due?
those results should be due sometime probably in the second half of October. Yeah, so that would be a game changer. Now this system, the Morrison deposit was 3 million tons. It was about 2.1 million tons mined, plus there's a historic resource. So if we even find
What
a
sort of
third
grades?
that, I think the mine grade of that 2.1 million tons was about 7% copper, about 8 grams of precious metals, and around 1.4% nickel. So pretty decent.
Yeah.
It was mined less selectively near the end, more long hole bulk mining methods. But when I was in charge of the mine, we were mining 10% copper, 10 grams, and about 1.5 to 2% nickel. So yeah, and that's, like I said, that was about a 3 million ton deposit all in all. I think that, again, if we can delineate 1 million tons of this kind of material with a ramp and the infrastructure already there, it could be an absolute game changer for our company.
And then, so would you potentially sell ore, is that direct shipping ore at those grades, to somebody else? And what payability would you get on that kind of value dirt?
Yeah, so we have agreements with Vale and Glencore. Most likely this would go to Vale.
Okay.
They have a right of first refusal on the ore sales from Levack mine, so I think they'd want it. So we would direct ship that ore to them,
Right.
and they would get paid. Now, general terms, and obviously it's confidential, I can't get into specifics, but general terms, you're going to be getting, in the low to mid 90s on recovery of copper. And then from a smelter, you're going to be somewhere in the 90s as well on payability from a smelter. And then on the precious metals, ballpark recoveries will be somewhere between 70 and low 80s percentage wise. So yeah, it's these mills are set up for this type of ore.
And they want them because they're sweetening the other concentrate they're already processing.
Absolutely.
And they're hungry mills anyway.
It produces a lot of concentrate with less feed.
So if I multiply those percentages through, I go to like 70% plus payability to Magna. Is that right?
That's a pretty good, pretty good estimate.
That's still a lot of money left on the table. Speaking of Vale and Glencore, Jason, I'm thinking about what's going on in the world of M&A with big mining companies. What do you see happening, if anything, in the Sudbury Basin, given that when crumbs fall off the table of the majors, it's normally highly profitable for juniors, and you'd be a great example. Is there any potential consolidation or opportunities you see strategically in the Sudbury Basin in the next year?
Yeah, definitely potential. It's a very interesting time, I think, in Sudbury. Being a historic mining camp, been producing for over 125 years, and having two majors that I think are looking at that camp in a different light than they may have been 15, 20 years ago. So I think there will be opportunities for additional non-core assets, and Magna is obviously very well positioned, being a supplier of ore to the mills already. I see this as being another one of the major growth factors and driving forces of how we are going to become a much larger company in the future.
So let me ask the question a different way. Can the processing synergies of Glencore and Vale ever be realized? The fact that they're all there in the Sudbury Basin together. Is there some way that those assets can be optimized by working together rather than in two corporate entities?
Yeah, I think there's definitely opportunities. Now, I can't speak to Vale and Glencore and how they can work together.
Right.
There's been a lot of talk for many decades on when it was Inco and Falconbridge.
Yeah.
Why would you not just consolidate the basin? You're trucking ore from one side of the basin to the other to get to your mill, and there's a mill right beside that mine. So obviously would be synergies. Whether we get to that and they can come to some agreement to make it work for everyone, I wouldn't even speculate. But I think for us, both of those mills are underutilized. They both have a lot of capacity. And I would say they both need, feed for their smelters for a long time. So the more we can help with that, the better. And it's great for Magna. I think it's very beneficial for Vale and Glencore. And, we're in discussions all the time with them on a number of different items, and we have technical steering committees set up. So lots of opportunity there for us, for sure.
Great. And briefly to recap, Jason, as we look through next year then, so you're going to figure out what you're going to do at Levack. You're going to drill R2, so you've got a second mine coming online. You've already got McCready Rest going, and you've got potentially life-changing exploration results from R2. Is there anything else that shareholders should think of for Magna in the next 12 months?
Well, I guess one thing that we're pleased about is we went out and raised $50 million that we closed last week.
Congratulations.
So that puts us in a strong position to move forward with Levack, and being able to move it ahead quicker, I think, has a lot of benefits, and we're quite excited about that. So we'll get into a very aggressive drill program with that. And we'll also look at opportunities, because we do have a lot of other properties in the Sudbury Basin, over 500 square kilometers now, which is a sizable position. So there are other targets that we're really excited about.
On your existing properties?
Yes, on our existing properties.
Okay.
And again, much like the past few years where we've surprised the market, I would say, even though we've always said we want to consolidate, we want to grow, we're going to acquire non-core assets, I think there's an opportunity over the next 12 months to surprise the market again with another very strategic acquisition of some other non-core assets in Sudbury. And based on the size of our company now and the ability to raise capital and move things forward, it just makes those discussions much easier.
Interesting. Jason, congratulations on the year you've had, and it sounds like you're going to have another equally busy and expansive year ahead. And in particular, on a personal level, for watching you on the running track this morning, I think despite the fact we're all a year older, you're looking at least as fit, and it's looking well on you. So congratulations on your well-being.
It's great.
Thanks for coming.